Settlement typically involves negotiating with your loan servicer to pay less than the full amount owed on your loans in exchange for a lump sum payment or a payment plan. Before you attempt to settle your student loans, it's important to understand the potential consequences. Settling your loans could negatively impact your credit score, and you may also owe taxes on the amount of debt that is forgiven. If you are considering settling your student loans, it's a good idea to contact your loan servicer to discuss your options. You may want to hire a debt settlement company to help you negotiate with your lender or consider working with a nonprofit credit counseling agency for assistance. Ultimately, settling your student loans should be a last resort after exploring all other options, such as income-driven repayment plans or loan consolidation. It's important to weigh the pros and cons and fully understand the potential consequences before deciding to settle your student loans. When you can settle student loans. Federal and private student lenders will require your loans to be in or near default to start settlement negotiations. Federal student loans enter default after 270 days of past due payments. Timelines vary for private student loans, but default often occurs after 90 days of missed payments, according to the Consumer Financial Protection Bureau. Federal student loans are rarely discharged via bankruptcy, but private loan discharge in bankruptcy might be an option to get rid of your private loans. What happens when you default on a private student loan? When you default on a private student loan, it means that you have failed to make payments as required by the loan agreement. The specific consequences of defaulting on a private student loan can vary depending on the lender and the terms of your loan agreement, but some possible consequences include: 1. Damage to your credit score. Defaulting on a private student loan can seriously harm your credit score, making it more difficult for you to obtain credit in the future. 2. Collection actions. Once you default on a private student loan, the lender may begin collection actions to recover the amount owed. This can include phone calls, letters, and even legal action. 3. Additional fees and interest. When you default on a private student loan, the lender may charge you additional fees and interest, making it even more difficult to pay off the loan. 4. Wage garnishment. In some cases, the lender may seek a court order to garnish your wages, which means that a portion of your paycheck would be automatically withheld and sent to the lender to pay off the loan. 5. Loss of eligibility for future financial aid. Defaulting on a student loan can also make you ineligible for future financial aid. It's important to contact your lender as soon as possible if you are having difficulty making payments on your private student loan. You may be able to work out a payment plan or other arrangements to avoid defaulting on your loan. Private student loan limits. Private student loans are loans that come from individual banks and lenders. The borrowing limits vary from one lender to another and can also depend on your credit history. Often, you'll want to get a cosigner to help you qualify for a loan and get a reasonable interest rate. Can you take out more than one student loan at a time? Yes, it is possible to take out more than one student loan at a time. In fact, many students need to take out multiple loans in order to cover the cost of tuition and other expenses. There are different types of student loans available, including federal student loans, private student loans, and Parent Plus loans. Students and their families can take out multiple loans of different types or from different lenders, depending on their individual financial situation and the cost of attendance at their school. When taking out multiple student loans, it's important to keep track of each loan and its terms, such as interest rates and repayment periods. This can help you manage your debt and make sure that you are able to make payments on time. It's also important to be mindful of how much you are borrowing and how much you will need to repay after graduation. Taking out too many loans or borrowing more than you can realistically afford to repay can lead to financial stress and difficulty in the future. Overall, it's possible to take out multiple student loans at a time, but it's important to carefully consider your options and borrow responsibly to avoid overburdening yourself with debt.